I just want things to get better. Mm-mm-mm. Yep. So back on live, guys. So yeah, let's take a look at the charts. Sorry for earlier on. You know, one of those one of those shitty things happened. So I have eyes on gold, in particular, and so first off, let's do like a full top-down breakdown on gold. Yeah. So when we look at gold, yeah, if you've joined, just kindly leave just react in the chat when you join. Okay, so we want to look at gold. So I'm going to be using Oanda just so I don't mess with my own analysis. Okay, so when you look at gold right now, yeah, mind you, we're still trading the same way I've told us to be trading for a while now. Yeah, and it's all about understanding the direction of the market. Where is price going to? Where is price coming from? Where is price heading to? These are the major things that we want to pay our focus on, and why is prices heading there. So now, when you look at gold, you can see that gold is in what has been in a very bullish uptrend from February. Okay, and even if we want to even scale lower, okay, would still have something similar to that when we plot our trend line. Okay, so we see prices finally actually breaking out of this bullish move since December on gold. Now we also see gold hitting the all-time high, the all-time anticipated and predicted high of 3,500. Okay, before the sell started to happen, and then we've seen price range to the upside, constantly trying to break above these highs. So we have two major resistance right now on gold. So we have the 3,500 and we have the 3,450 area that prices have failed to break again for the second time. Now what happened you know after that? The next thing we see happening after that is prices then did what? Price was actually trending higher, but then finally broke this trend line. Okay, now mind you, trend lines are as much as they are important, okay, when it comes to the chart, we just don't want to rely on that. And that's why the team for today's live is pairing smart money confluences together with everything. So we want to look at the smart money confluence. Okay, so now let's go to our 4 hourly chart. That's where I want us to view this confluence from. Now, if you've watched my video on trendline, just in case you've not watched my video on trendline, let me see if I can drop a link of that video on this call. But if you haven't, just in the description of this call, I would put in the link so you can go back and watch the video on trend lines, and you understand what I'm about to explain. Now, trend lines are not just important alone, but we tend to want to pair them, or we should want to pair them, okay, with structure. Now, how do I mean? So we know we've broken this trend line. For a lot of people now, yeah, it is they are trigger happy. Oh, broken trend line. Okay, let's enter the trade and everything. But for me is I'm trying to understand the structure before the break of the trend line. So here, this is the structure before the break of the trend line. We had a bullish structure. Okay, so it means that in order for us to fully break this trend line, we also need to break the trend line first, and then we have to what? We then need to invalidate structure. So how do we invalidate structure? We want to take out the most relevant key area that keeps that structure valid. We want to invalidate that level and then see a revalidation of that level before a revalidation or a retest of that level before we can then say fully and wholeheartedly that structure has changed. So when you look at this gold right now, you see that we're in this bullish structure here, okay, and then prices broke through the trend line. But where is really the structure? Where is really the valid structural point or area for us? Is we had this high and we had this low. Should I switch my color? Let me switch my color to white. Okay, so we had this high and we had this low here. Let me see if I can increase the marker. Okay, this high and this low. So what in essence are we looking for? We're looking for prices to break this area fully, properly, first of all. Then we want to then see it do what? Go back to retest. Now the retest we're looking for is we want to see a retest of prices doing what? Failing to create a new higher high, not just a retest of the trend line. So most times what your thought is, if you have a trend line and prices break the trend line, retest of trend line, and then you get your trade, but that's not really the case. So what you want to learn is to follow structure alongside your trend line. So even if you plot your trend line and prices break the trend line, the next question you should ask yourself is, did it break the valid structural point? So even if it was a bearish trend line, okay, even if it was a bearish trend line that got broken like this, you need to ask yourself, did it break above the previous structural valid point? First of all, then the retest, is the retest coming back into a good discount point? So same thing here. If we finally get to break this level very well, this for me here is not a break, it's not a proper break. I want to see if prices will break here properly first of all again before moving higher. Now when we're coming higher, I would expect prices to come into where? To come into a good structural point too as well. So we have this area here, this previous area of what? Of resistance that never acted as a support. Instead, prices broke through this area of resistance here. So now we can then get a revalidation of that point. In order for us to get a revalidation of that point, we then need to see prices come into this area and fail to break above this area. That way it would then be doing what? It would then be retesting the trend line as well. So now you have a confluence. So now what is the smart money confluence I'm talking about here? Okay, so let me just quickly take off these drawings for my chart, so we'll look at what I mean by the smart money confluence. Okay, so now we're still talking smart money confluences. Okay, we're still talking smart money confluences. So now let's look at the smart money confluence I'm talking about. So we have a break of trend line, okay, and then we can also then use the smart money concept on this. So we had the previous break of structure here, okay, and then we have a possible change of character here. But why I am not fully defining here as a possible change of character here yet is because I didn't get a full body candle close. Usually I'm one for getting a full body candle close. I don't use wicks because wicks are just liquidation tactics. Okay, so they probably have just liquidated the stops at this point, came in to mitigate probably a possible fair value here or a possible level here, and then prices are ready to fly back up. Okay, but in order for us to get that possible change of character, that's why I call it a possible change of character. You don't hear me calling it a change of character yet. It's a possible change of character. Is I need to see a full body candle break below this level, especially when I'm identifying this on a 4-hourly time frame. So I want to get a full break below this level here. Okay, so I want to get a full break below this level, and then prices should come all the way back to retest. Now if prices should come back to retest this point, okay, now what would we be seeing? We see this place that was a previous break of structure here will then be acting as what? It will also be acting as a key level. Why? Because we see this has acted as a resistance severally. Okay, this place has acted as a resistance severally, not once, not twice. Resistance, but it never acted as a support. So in order for us to see that this level, becomes or remains a resistance, we need to see prices stay below this level. Okay, we need to see prices stay below this level, and then we can then continue selling. So that way, what would we have now? We now have a break of structure to a change of character. So we now have a shift. Okay, so we have a shift from what? From bullish, okay, to bearish. So once we get that shift, we then want to get the retest. Okay, we want to get the retest. We want to understand why prices should not go above here. So that retest is then going to push prices back into the trend line, and also into a valid area of supply that we can spot on this as using smart money concept. So this was a valid area of what? Of supply. Here also was also a valid area of supply. So we have one here and we have two here. So we can either use one of these two places to validate our next entry. Now when this happens, we're not just going to jump into the trade. We now still need to make sure that this key level here, prices comes back and sits under this key level before we can then make our entry. So it's all about understanding the technicalities behind structure more than just trying to use support or resistance. So now looking at gold, okay, so we're going to use this same thing to analyze gold right now. Okay, so let's look at gold now. So analyze gold with me, okay, and then let's see if we can find an entry. Okay, so now let's delete this. Let's delete this. So now that we've identified that, okay, on gold, so we can then go to the 1 hour time frame now, and let's look at the 1 hour time frame. If you look at the 1 hour time frame, the candle you see here is a clear liquidity candle. It's a liquidation candle. If you don't know what a liquidation candle is you see those big massive candles that are very big, and usually we call them either a buy to sell candle or a sell to buy candle. That's exactly what we have here. We can see that we have a very massive candle here. See this candle? This is a sell to buy candle. Okay, so this is a sell to buy candle. Now where did this sell to buy candle happen? This sell to buy candle happened on the 1 hour time frame, just after this place, just after the liquidation of this point here. Here, just after it took out this level here, and then it did what? Came into this level and then started to buy all the way back up. I saw the buys this morning, but I wasn't just playing around with the structure. It wasn't giving me what I would have wanted to take the buys, so I left it. Now, would we see prices go higher to the upside a bit before prices coming back down, or would we see a continuation of the buy to the upside? Now take this. We have FOMC coming out tomorrow. A possible lowered interest rate is going to make the dollar weaker. If the dollar gets weaker, it means that everything based the dollar is going to skyrocket. A dovish sentiment means that you're relaxing the dollar and you're making the dollar more affordable. Means the dollar should become cheaper, and everybody's going to short the market if interest rates are lowered. But if Powell keeps interest rate the same, then market conditions continue the way they are. Structure remains the same. Nothing changes. We all know he's not going to hike interest rate. There are only two things that would happen. He either cuts interest rate or he leaves interest rate normal. And from what I'm viewing, there's a likely chance, or there's a likelihood, even if it's the least likelihood, that Powell might want to actually not cut interest rates just because he wants to actually get back. But I mean, politically, that's their business. But nonetheless, those are the two things that would happen. So if we see Powell actually cut interest rates, okay, tomorrow, then this is what's going to happen. You see this level that we spoke about just now on the 4-hourly time frame, okay? You see this level here. Let's make this white. Okay, so you see this level here that I spoke about, this area that has become a resistance severally. Yeah, remember I said this is not a complete break. I don't take this to be a break yet, because this was a liquidation candle. Yeah, so because this was a liquidation candle, here, this was a liquidation candle. I don't take this to be a possible change of character yet, except prices actually come back and close below it again. Yeah, then I'll take this as a possible change of character, but this was a liquidation candle, so I'm not really interested in it. But you see this level here. Now let's use macro, okay, and smart money analysis into this. Okay, if Powell should cut rates, dollar gets dovish, safe havens starts to they become champions of the market. Yeah, so now if he cuts rates, what we're going to see is this: prices is going to push higher. And when prices push higher, remember this was a previous resistance, this was a previous resistance, and resistance has not really acted as a support level. If he cuts rate and the dollar gets and his policy statement is dovish, we're going to see a price push, and we're going to use this level now as a possible support level. Why? Because since he has acted as a resistance, we then get a revalidation of this level as a support level. So what if this level becomes a support level? Then prices would stay on this level and push higher. But if he doesn't cut rate, then we would get a retest back of this level, and prices stop at this level, stay below it. We get our change in state of delivery to prove the bearishness, and then we continue lower. Does that make sense? I hope it makes sense to us. So you see, this is how you just kind of, this is how proper analysis, you know, should be identified. And I'm not saying that, you know, other blocks, break of structures, and all of those things are not valid. They are valid. In fact, as a matter of fact, I'm using them presently while I'm analyzing this chart. Okay, now for more confluence, I like to use my moving average. Yeah, for more confluence, I like to use my moving average. You see, if my moving average had properly crossed below this area here, okay, had crossed below this area here like this, I would have gotten a full solid trust that, okay, this level has broken. But you see that we didn't break it, we're still just above it. So even my moving average is not confluencing completely yet. So I'm still going to be watching to see what's going to happen in the next couple of hours till the start of tomorrow, till midday tomorrow, before 8:30. Is it going to be 8:30 or 10 a.m. their time? That's when we're going to be seeing FOMC. So all of these things are things that I put into consideration before I take a trade. So sometimes before you notice that, I haven't posted a trade in a while or anything of that nature, it's because I'm trying to make sure that I get as much confluence as I can. Now mind you, it's not that we cannot play the smaller time frame game, it's just that it's different for different people. Yeah, it's different for different people. I'm not a full day trader, so I can't just be day trading, because I'm just going to find myself chasing the market at every point in time, and I don't want to do that. Because at the end of the day, being a trader is not just because of people taking my signals, about me first of all. So I have to do what I'm comfortable in and what's comfortable for me. If it's not comfortable for you, I mean, that's why there are a whole lot of other people, and you know, so be your own person as well and understand it. So what I'm seeing now presently is we either get prices come back to this point before I look for sales again, yeah, or we get prices come back to this point here because there's liquidity resting here, so prices pushing to this level, and I would want it to actually push higher if I'm going to be very honest. So I'm going to be looking for sales on gold around 33370 at this point. 33370, I'm going to be looking for sales on gold at that level. Then I am also going to be, let me zoom in a bit so we can see that I'm going to be looking for sales at 3337 on gold. Sorry, so let me increase my font size so it will be better for us. Okay, that way. Yeah, so I'm looking at 3370 or even higher, maybe 3380 for more sales to come into the market. Sales could continue from here. And then push a bit higher before we actually get the full sales. But tomorrow is going to be like a determining factor for what's going to happen to the USD, honestly. So anything you see in the market now, you might be encapsulated with a lot of range. If you keep getting ranges in the market, just stay out, because you're just going to keep losing money. It's going to keep, you know, luring you into the market and stopping you out. So it's even better you avoid taking too many trades today. And then for GBP JPY, like I said, GBP JPY has been playing like I don't even know what to call it. but I have a full-blown analysis on this that I sent out. You see, we are at this 200 level, and I strongly believe that 200 level is going to be invalidated. Why is that so? 200 level has acted as a resistance in October of 2024. It acted as a resistance in July of 2024. It acted as a resistance in November of 2024. This same area was also fueled to act as a resistance or a supply again in... No, I didn't give any entry on gold. There's no entry on gold yet for me. So I'm looking for prices to... I'm looking to sell gold from 3380 or 3370. That's where we're going to be looking to sell gold from. I'm not chasing the buys at the moment, because anything that's going to happen on gold is going to be reactive based off FOMC tomorrow. Okay, so on GBP JPY we also have December 2024. We see price take supplies from this level here. So I strongly believe that we even acted as a resistance again in June of 2025 at this same level. So I expect prices to finally take and eliminate this whole level here. I don't see an elimination of this whole level here, but instead what we've seen, price came here and price has been ranging at this point. Now usually something happens when you see a consolidation at a key level. Two things: understand the direction of the consolidation. So look at this. This is a tip for everyone on the call. Yeah, look at this. When you see that market is bullish and is being bullish into a key level to the upside, and you cannot see any form or any change in structure of that market. So this is what I mean. Let me use Owanda to analyze the market so I don't scatter my analysis. Okay, so we see that the market is strongly bullish. Okay, moving to the upside, and then we also have this level here that I want prices to take. I want prices to break above 200. Now look at this. 1, 2, 3, 4. Now price has not changed anything here. Can you see? Instead we can see the market creating some sort of continuation pattern at a key level. A continuation pattern at a key level. Now this is not a reversal pattern, this is a continuation pattern. Pay attention, it's not a reversal pattern, it's a continuation pattern. So we are seeing a continuation pattern at a key level. See, go back to learn your structure, your market structure and chart patterns again. Pay attention to the rules of chart patterns, not just for the fun of it because you want to know it, but pay attention to it. So see, when you see something like this, for instance, happening in the market, yeah, so this is a key level, and then prices comes into this key level, okay, and does something like this, and does something like this, and then does something like this. The moment we break this structure, see, it's always about structure. If for any reason we break this structure now, for instance this point here, yeah, we come and we break here, then we can then be scared. But we've been ranging in this level here for how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. We have 16 candles. So this has been 2 weeks plus. Okay, 2 weeks plus. So that is 5 working days plus another extra 6 working days. That's about 3 weeks. As a matter of fact, 3 weeks we've been in this range. Now what do you notice in this structure? Market is bullish coming into a key level, ranging at a key level, but not only is it ranging at a key level, there's a chart pattern that the market is signaling to us here, and I'm expecting that we should be able to see it by now already. So let me zoom in and then let me identify that chart pattern for us. Okay, and this is the chart pattern I want you guys to see. Probably when you see it, you won't be able to unsee it again. What do we have here? We have the base of the flag here, and what do we have here? We have the top of the flag here. Okay, so what do we have here? We have a previous resistance, and what's prices doing? Prices has been sitting on top of that resistance, so meaning that prices have done what? Tried to break this resistance severally, but keeps rejecting at this resistance here. And what do we have? A top that has been rejecting severally too. Okay, so what do we then have here? We now have a consolidation. So when we have this consolidation and we have this resistance holding prices here, and we also have this we have this previous resistance turn support holding prices, and we also have this resistance here, and then now we have the bottom of this previous bullish leg and the top of this bullish leg. What do you have? Now you have a flag pattern. So what happens in a flag pattern? What's the direction of the flag pattern? We're looking to break above. So doesn't that make sense that these people above this level here are most likely going to be liquidated? And you see they've been a liquidation of people trying to sell since. Every time prices rejects on them, take them and stops them out. So what you can see now is a clear indication of what? Of a bullish flag pattern. And a bullish flag pattern is a what? Is a continuation pattern. So if you have a continuation pattern, indirectly you're looking to see buyers. So me, I'm waiting to see at the close of today. Okay, I'm waiting to see what the close of today looks like. If I get this candle close as a good rejection candle from this level again, then I want to see tomorrow during the interest rate decision of the Bank of Japan. I want to see what their monetary policy is going to look like. So this is how you confluence fundamentals with technical analysis. You don't just jump into the market. Oh no, you have a holistic view of the fundamentals itself, and then you move into the technical part of it. Then now you use your technical analysis to try to make sense of a possible result of the fundamental analysis. So now if I get this, and then tomorrow, and then by tomorrow I actually see, you know, like good like information coming from the Bank of Japan about their policy rate, then I would then say, okay, now I know where the direction of the market is going. You see, the problem that a lot of your traders they have is they want to trade the news. They want to run into the market. They want to trade the news, and usually that's not how it works. You try to wait for the result of the news to fully understand, to grasp what the what do you call it, to grasp what the banks want to do, to grasp what this central banks or reserve banks they want to do with the economy, to grasp what is happening in the economy first of all. Then you look at the technical side of it, and then you use a wider range of knowledge that you've gotten from that information to kind of like analyze the chart. You get? So the truth about it is everybody wants to be a day trader, and that's what the banks want you to be, a day trader, so that they make money off you. So let's look at this. So we have resistance at this point here. Okay, let me make this a bit thicker. So we have resistance at this point. Let me use square. Okay, so we have resistance at this point. Let me use the rectangle. Okay, so we have resistance at this point here, and then we also have this. We also have this resistance at this point here that I'm looking for prices to break above. Okay, then what do we see now? Let's use smart money confluence here again. Okay, so let's add the smart money confluence. So now we have the breakout structure here. So we have the breakout structure here. Okay, now before the breakout structure happened, where was the other block? So we have the valid opposite candle before the breakout structure, which is this level here. And what do we see? Prices have what? Prices have come into this level severally. Okay, so let me just draw this out as my daily demand. Okay, so prices have come into this level, tapped it 1 2 3 again, and price is still going up. Now mind you, we still have this resistance turn support here. So what do we have? So we have prices stuck in a range at this level. So you see why the market is holding and is waiting, because why? We have fundamentals coming out on Thursday. When that fundamental come out on Thursday, we get our confirmation. When we look at our candlesticks, we get candlesticks confirmation. We go to a lower time frame, and then we understand what's happening, and then boom, we place our trade. So you see, you don't have to force the market. You just need to wait for the market to come to you. Wait for the market to come to you. That's why I see that the banks, they have the ability to force the market because they have liquidity. But me and you don't have liquidity, so we wait for them to bring prices to us when we can identify where they possibly might be taking prices to. We bank on the probability of the efficiency of market, and then we take advantage of it. and that's what we're doing as traders. Remember, I said this week we are learning. So you see this was the when we refine our order block. Now we can refine our order block very well, and you can see how prices came and touched it, pop, and then started to move up. You get, and then we see prices come back again after all this inducement here, swept them, and it's still pushing up. But I'm not just going to jump into the market immediately now. What I'm going to do on this lower time frame here now is this: I'm going to look for a revalidation again. So I keep saying this word, but it always sounds funny. A revalidation. See, this place has acted as a support. Prices have broken it. So if this does not hold as a resistance now to push prices lower, and it goes above it, now I'm not just going to jump into the market because it goes above it. I'm going to wait for it to revalidate it again to make sure that it is still a support level. If it revalidates it to make sure it's still a support level, that means prices will go above it, come back below it. Do you understand? Test it again and make it a good support level. Then I can take my trade from here. Sure get. You get. So that's just how, you kind of want to like view the market at every point in time. Just be chill with the market and just understand prices. Honestly, if you understand prices, every other thing gets easier from there henceforth. Okay, so that's what I personally will be looking for on GJ, based off what the news is going to be bringing down for them. Now, where do I think exactly that I might start to consider that the market is bearish when it comes to GJ? So you see these lows here, these lows could be manipulated like this, and prices move to the upside. But until we fully take away 195,500, this level, if prices does not break this level, yeah, and come back, then we're not bearish. If prices does not break this level and come back, then we're not bearish. Because at the end of the day, you always want to stay in line with the higher time frame structure. If you stay in line with the higher time frame structure, then you're never going to lose out. You can clearly see that this market has been doing what? Making series of higher lows. So this is the key higher low here. So anybody that is trying to force you to sell, yeah, is probably just going short term into the market. That's what the person is doing, short term. But if you stay with this structure here, you would understand that you shouldn't be looking for sells, you should be looking for buys. It means that anywhere you buy from here to here, at any point that you buy, you can hold that loss. This is a secret nobody ever tells you about. Anywhere you buy between a swing high and a swing low in a bullish market, you would be able to hold a loss if you use the right lot sizing or the right risk management system. You can hold a loss. Imagine someone who bought GBP JPY from this point here, okay, and bought here. Do you know that even if he was in loss, as long as that loss was not going to blow his account, he still ended up in profit at the end of the day? Why? Because he's in direction of the trend. So this is where most people don't understand, where they tell you the trend is your friend. When they tell you the trend is your friend, or always be in the direction of the trend, it's not necessarily you just take trading with the trend or anything. It's you understanding that if you understand the overall structure of the market, you're always going to be on the winning side. So you can confidently hold a loss because you have an idea of where the market is going to. Now, don't get me wrong. I'm not trying to say that 100% of the time you're going to be right, but you understand where the market is going to, so you're a bit more confident in your position. So that's why you see swing traders can take a trade and go to sleep, because they are confident in the position and the direction of the market. So once you can spot that higher time frame liquidity, you can understand the structure of the market and where the market is going to. You can clearly see and identify and wholeheartedly say this market is bullish. Then now you can stay in the market even longer. So what you can then do is you can then continue to scale in and scale in and scale in. And don't get me wrong, I understand that capital is imperative when it comes to trading, and it's the reason why most of us can actually hold trade. It's the reason why most of us haven't even made as much money as we want to make, and that's fine, that's understandable. But stay with the skill as long as you can. When it comes all together, it would make sense at that point in time. It will make sense at that point in time. So we want to stay within this range. So this is the range, this high and this low. So anything that happens between here could just be, market dancing and dancing and dancing. At the end of the day, you still end up bullish. Why am I even saying that I would still end up bullish? Let's go to the daily time frame now. For instance, why I'm saying we still end up bullish is you can clearly see that market has shifted bullish, and we can also see that these highs here are not even like a major key high, except it proves to be a major key high, and the only way it can prove that is for it to come back and break 195,500. If it cannot break 195,500, then it's useless. So in order for this to prove to us that it's strong enough to continue pushing prices down, it needs to break 195,500. So always pay attention to prices. You see me talking about prices, because price at the end of the day is what we are trading, not even trend lines or anything. We're trading prices. So if we can take 195 out of the market, then we can look for a pullback, and then we can find a continuation. So we need an invalidation of 195 in order for us to go bearish. If we can't get that, then we can't stay bearish. But if prices should stay inside this range between this high and this low, and then we start to get bullish confirmation, and we start to see like a smaller time frame shift, then we can go higher. And where am I targeting overall? I'm looking for prices to come to where this true liquidity exists. And why this true liquidity exists at 210 is you could clearly tell that something happened at this point. And a lot of people had entered this trade, and this displacement means that at this level here, smart money traders or institutions would have left possible orders here again to fulfill prices. So they need to come back for this level. Now, am I saying that prices would come here this year? Who knows? It's GBP JPY. All this move you see here happened in 1 month. This happened in July the 10th, and this ended in August the 10th, in 1 month. So GBP JPY is fond of making moves like that. So we can still see that kind of displacement happen to the upside. It is possible, but would it go there immediately? I don't know. But am I certain about? I'm not certain. I wouldn't say I'm certain. Let me not use the word certainty, because there's no certainty in the market. The market is the market, and it's always going to do whatever it wants to do. Yeah, but to a certain degree, yeah, I have a certain level of trust that market must come above 200. Bear me witness. If it doesn't happen, I'm fine and I'm okay with that. Then I know that prices must break 195. Prices break 195, I go the other direction. You have to be fluid. You have to learn to flow with the tides and the waves of this thing. And for today, I'm happy that we learned. Yeah, I didn't see a trade for us to enter immediately. Remember, I said tomorrow is FOMC, so my hands are like this until after FOMC. I don't have a business with anybody. Like, nothing concern anybody that wants to trade FOMC. My hands are like this. I'm not clicking buy. I'm not clicking sell. After FOMC, I understand what the market wants to do, and then I come from a standpoint where I'm more rational and I'm more informed to make a decision. And that's about it for me, guys. If you did enjoy the session today, we always want to keep it at 45 minutes, 45 minutes an hour session. If you did enjoy the session today, please just leave something in the chat and let me know that we're all following at some point in time. And thank you guys as always. I hope the number increases. As you can see, we have a pool to get to 3,000 followers. Okay, we want to get to 3,000 followers, subscribers before the year ends, and I know we can do more than that and we can push higher. So if you're on the call and you enjoyed the call, don't forget to share the stream every time you're on the stream with your friends, family, group, anything, community, anywhere, to join, and let's all enjoy all of this. Okay, so yeah, that's about it, guys. Thank you guys for joining. Thank you guys for joining as always, and I hope to see you guys tomorrow. Yeah, I'll be streaming tomorrow. Let's stream FOMC live tomorrow. Why not? Why shouldn't we? We should. So let's stream FOMC. I won't be able to stream FOMC live tomorrow. I have a webinar by 8 p.m. I think FOMC should be by 6 p.m. or 7 p.m. So I'll probably be preparing for that webinar. And yes, you should be on the webinar. Okay, you should be on that webinar tomorrow with Valetax. It's a Valetax webinar. So please be on the webinar tomorrow, guys. Be on that webinar tomorrow. Be on that webinar tomorrow, guys. You have to be on that webinar. You have to be on the webinar, guys. So let's get this. Okay, so the prop firm here, once you purchase your prop firm, just shoot me a message with a screenshot of the prop firm when you purchase your prop firm, the prop firm from Neoma. My link is there. If you use my link, you get 20% off and also an extra 20% off as a new person, as a newcomer. So you get 20% off when you purchase the prop firm. When you purchase the prop firm, just let me know. I'll guide you through and through to make sure and see that you passed. And before I forget, one of the 2 persons that won the last prop firm giveaway has passed this prop firm already. He's passed phase 1. He's in phase 2 already. And I have to say big ups, and I'm proud of him for not blowing the account and everything. So yeah. So once you get the prop firm, just let me know. So I'll see you guys by 2:30. If I scout the market and I see a possible risk that is worth taking, I definitely would share with you guys. But until then, it's Ryan for a reason, baby, and I'll see you guys. Cheers, guys.